Thank you very much for coming. My name is Darren Joseph, HEJ.tax. Our team is really about tax. We work with private clients and we help them demystify the sometimes confusing world of international taxation. We're part of a wider practice here in Asia called Moore's Roland. I'm actually here for Weber Partners meeting. We have it twice a year, and this time it's Jakarta's turn to host us. So I thought while I'm in town, I will set up some time and meet some of you guys. So thanks for coming out. So it is possible, first of all, I guess, to establish that you can be tax resident in more than one jurisdiction. So for example, me, I file a tax return every year to Singapore, Portugal, UK, and the US because I'm tax resident in those places. I'm tax resident in Dubai, but I don't pay personal income tax there. In the scenario in which someone is earning income in Indonesia but residing in the Emirates, because it's Indonesia's source income, it will be taxed by the Indonesian tax authorities. It will be subject to tax. Because the income is not being earned in the Emirates, it should not be subject to the 9% tax. If someone is just sitting there and enjoying dividends or whatever coming across to them, and they're not actively engaged in a trade or business in the Emirates. So if it is that they're trying to escape or to trying to minimize or optimize the Indonesian situation, and their income is 100% Indonesian source, it's unlikely that moving is going to make a difference, even if you're tax resident. Yeah. So it really depends on the source of income.
Yes, source of income.
So if the source of income is Indonesia, it makes very little difference as to whether you're living in Menteng or Dubai. So you would be in a more advantageous tax position if it is that as an Indonesian, you exit Indonesia, you exit the tax net of Indonesia, and you have income that comes from elsewhere in the world. So maybe you have business going on in Singapore or Hong Kong or Shanghai, particularly if it's Singapore or Hong Kong. So then potentially you can be receiving stuff into the Emirates tax-free or close to. If it is that it originates in Indonesia, because Indonesia is pretty diligent in taxing everything, you should not be at much of an advantage. So if it is that let's say you're earning income from Hong Kong. So Hong Kong, like Singapore, dividends are tax-free, capital gains are tax-free, generally speaking. So you could sit in Dubai or Abu Dhabi and you receive the dividends from Hong Kong and Singapore tax-free to you in Abu Dhabi. Well, you should take the steps to exit the tax net in Indonesia.
Exactly.
Yeah. So spend all your time there, don't come back. Well, or minimize the days and stuff. Again, just like in the US, you have like 135 plus visa categories. In the UAE, yes, there's a golden visa, but there are loads of ways of getting residency in the Emirates. And some of them are pretty cheap as well. So, because you have the system of free zones, you have something like 45 plus free zones. And each of them, you can just set up your company and that company gives you a work permit. If it is that you have earned income and it's a modest income, so let's say $100,000, $150,000, under the US tax rules, once you're living outside of the US, you can enjoy that tax free.